Afternoon, everyone. This is Trader Tim from eMiniMind.com, bringing you another Monday market analysis video to kick off the week. Before I do that, I want to let you know that I will be speaking at this year's Traders Expo in Chicago. That will be July 22nd through the 24th. You can check out my presentation on Monday, and I'll have more info over at eMiniMind.com as well about that. Hopefully we can do a little eMiniMind meetup, as we like to do at the expos, and always fun to put some faces to conversations that I've had for quite a while over email. So let's talk about the ES. Been quite a week in the markets, not really overly exciting in terms of market movement, but the hammer that we had last week on Thursday was pretty big. On Friday, rather. I'm sorry. Thursday was the hammer. Friday was the move above the hammer. Today, recording this video, markets just closed. And Friday's price action was super important to break above that hammer, break above this tiny swing high, but more importantly, kind of from the economic news reports that came out last week, as well as the earnings and some of the other media announcements that have been coming out. Things are pointing to the markets being fundamentally pretty strong and healthy, and I'm looking for the markets to move above this 2751 of the 61.8 to move in the upward direction, breaking out of eventually this triangle here to the upside. And the first step is sort of coming down. We're very, very tight at this apex, and just what I mean by that is we've got low, high, higher low, lower high, higher low, lower high, getting really tight, and the price action as well as the market profile that we now see today, much more typical profile to have develop as opposed to the last couple of days. Last week, earlier in the week, it was just kind of really messy. You'd have this opening range as an example here. An opening range, you would trade above the range and then prices would get really thin. You would trade below the range, prices would get really thin. It wasn't really balanced at all. There was, just these extremes, these bottoming tails that we saw with weak prints. And so to have some strength coming in the markets fundamentally on top of a better market structure is a really good thing to have. Now on Friday, I talked about, actually I tweeted something I don't do very much of in terms of real-time trades and things like that. I find that if you have the time to tweet and share every single trade that you're doing, it doesn't really leave much time for trading. I don't know about you, but it's a little bit tedious to kind of share everything as it's happening and trying to place trades at the same time. So the Tuesday live trading room is enough in itself. But on Friday, I talked about this point right here, where we were breaking above the high from the previous day. And that was basically the 26.34. It was a 26.35 breaking on Friday, breaking Thursday's high. And so that high from Thursday can be seen here. Let me just throw a trend line on that. And all I did, because on Friday, we had some good trending developing, but we weren't getting, I wasn't seeing a lot of, major pullbacks forming early in the day, and my thought was that, if this market gets going and if we get above 2634.75s, that this market's going to rip. And so rather than letting the market trade through and wait for another pullback, because I wasn't seeing that here earlier in the day, and then again we made one pullback just about to the 50, traded to the negative 23% target, but then the next one, however you want to do it, from that anchor to highs or from the swing low to highs, we didn't pull back, make a full 50% retracement. So market was showing signs that it's really strong and it's likely to punch through the previous day's high. So I just put my buy stop at 35s, same 6-tick stop, and just let her rip through on that momentum. And then just as I always do, trailing my stop underneath the swing lows on the way up. And so it's a good way to get into a market that's not making a major pullback, that's showing signs of momentum. Notice I'm not, modifying my stop to have a monster, multi-point stop. Using a very tight stop still, but just using the buy stop as a way to jump on the market, sort of, picture a train starting to build steam, and you're kind of standing on the sidelines and you start jogging next to it, and as it hits 15-20 miles an hour, it's moving pretty quick, but it's still slow enough for you to kind of jump on and get tagged along. So this was still early enough. I was deeming that that was down here. So that was early enough in the run-up, in the trend, that I anticipated, a much more trending to follow. And in addition to that, I did purchase some, make some additions to some longer-term positions. I've been doing a little bit of that down here, but I did that again on Friday. And that's more of a, continuous process in terms of longer-term investments. I didn't put on really many swing trades, new swing trades last week, that is, but I do like Home Depot and a couple other names that had traded a lot last year. Hadn't been trading them recently, but now I'm starting to get back involved with those. Today, I wanted to talk about one other thing before we wrap up here. Let's see here. Oh, at this morning, so today's chart, great example. We've got a nice trend day here on Friday, and if I put my range of the first 30-minute bar, look at how small that period is compared to the rest of the day. So if we consider the whole day, 2612s, 2670s, look at where the first 30-minute range is. It's so tiny. And so that's why I say that first 30-minute range is a very big tell as to, are we likely to trend or are we likely to be range bound? Now let's do that for today. First 30-minute range high, first 30-minute ranges low, and what do we have? A market that stayed within the first 30-minute range for 85% of the day, and barely, we came out and then just bottoming tail, came right back in. A market that closed right at the open, so a very neutral day. I'll show you what that profile looks like. Here, very balanced with the profile itself, a lot of TPOs on the same price areas. So, good market structure, even though it was a tighter range. Take a look at the first hour or so, and we had some trending within the range. And that's what I like to see. Even if I'm not taking a ton of trades in a range-bound market, signs that the market is making good movements and healthy structure. We can come in here, we can draw, we can see the lower highs and lower lows. We can draw from low to high. We can see the nice pullback here, 2672.50s traded right up to the negative 23% target. The setup I want to talk about in addition to that one was earlier here, where the market was moving up and we kind of formed this double top up here, and then once the market came down, double top, broke the swing low, the previous swing low here, just by drawing from highs down to this low. Now you could use this one up here. That's totally valid too. You know, the market broke this previous swing low by a tick, but if you're drawing up the the next retracement, what I like to do, following along, if you get a big run up like this, rather than pulling from way back down here to highs, I'll just pull from the more recent major swing low. So down here to highs, and noticing that we did come down, trade at the 50, bounce. That's what put in the double top. At that point, I would tighten my stop up underneath the low of this candle. Because we have a double top, it could be a reversal, and that's what we got here. So not only did we break the swing low, we broke the 61.8, and so I just flip high to low, get rid of this drawing, and we have another trade in the opposite direction, heading to the downside. So some good trades and good market structure. Things are starting to shape up as expected after the FOMC meeting announcement. The trading typically gets much better. We talked about that last Tuesday, and so I expect good things. Tomorrow, I believe, Jay Powell is at the Swiss Summit. He's speaking in the morning, so it'll be way earlier than our markets open here. Yeah, 3 in the morning he'll be speaking, and so early, very early before the NYSE open. So shouldn't have anything to worry about with that, but he is discussing monetary policy. So last time he spoke, the markets got a little wild. So we'll see what the morning brings, and you can check out that the live trading session every Tuesday, emoneymind.com/VIP. Thanks everyone. We will talk to you soon.